Hey, happy Friday. It's Tom Sheeran, and we've got a special guest, Daniel Richardson with Fairway Mortgage. We're going to jump right into it, get an update on what's happening out there with rates, other wild stuff that's happening, and they've got a special, unique program at Fairway Mortgage that we'll talk about too. And happy Friday to you, Daniel. How's it going?
Going all right, man. Can't complain. As you know, Friday is here. It's always a good day. Getting ready for the weekend. So college football and pro football is back. So pretty excited. Great time.
Plus, we keep busy on the weekends and nights anyway in this business, so we try to fit all that other good stuff in too. So Daniel's out of the Buford Fairway Mortgage office, and we've known each other a long time. We used to be in a networking group. That was at least 15, 18 years ago, wasn't it? And you went through the banking industry and now doing mortgages. So you're well versed in the financing arena. So it's good to have you today. And I've heard a lot of rumblings and we always heard about, is there going to be another market crash, and what's going on with all these forbearance properties, and it's so regulated now compared to when the bottom fell out back in '08. We were both working in the industry then, and we're still here, but there's a lot of things in place that aren't, the interest rates are low. There's low inventory. It's very regulated now. What do you see happening, in the next 6 months, next year with the market?
Well, I can honestly tell you that I don't believe anything is going to change from what we're already seeing now. Just feedback from agents like yourself and understanding that I know this forbearance situation. From a student loan standpoint, forbearance, the pandemic has put student loan providers on a national, again, forbearance, if you will, on receiving student loan debt.
Mm-hmm.
Everybody that has a student loan has the ability to not pay it unless any payments that they do make go straight to the principal. So that's going on through January, I believe, before they will finally lift it. They extended it. The Biden administration extended Trump administration's idea from September all the way through January. And I think after that, that's going to stop. So from a forbearance standpoint on that end, after January, we'll see what happens in regards to if they extend it again, or will people have to go back to making their student loan payments normally. On the flip side to that, there has been a benefit. I know recently in August, the new administration has allowed FHA loans, where in the past we had to take 1% of the student loan balance. Now we can take 0.50%, and also depending on the type of debt that client has, if they have an IBR or an IDR, and those are income-based repayment plans or some sort of graduated repayment plan, there is a chance potentially that we can use that payment instead of the 0.50 requirement. So there's some specifics around it, but the options are there in the event the credit bureau states the appropriate payment on that particular student loan. So those are some really good options in allowing us to help our clients. In regards to the property, I don't think there's going to be a change. I mean, everybody's kind of concerned. I've heard different people from all over different scopes of business say that, the pandemic and people, and as far as the property, they're waiting on things to die down, or foreclosures or whatever. And I just don't see it happening, at least from what I'm hearing from people like you, Tom, and other agents out there, that, people are willing to willing to pay over asking price in some situations.
Mhm.
So there's really no reason for a house to be foreclosed. When if somebody needs money and they don't have it, they can sell their property and get either asking price. They can get asking price and potentially go over that. So I think the market's going to continue to be what it is. I mean, just because of the way the market has been right now, like you said, less inventory, and a lot of demand.
Yeah, and we are hearing a lot of landlords are feeling pressure because some rental moratoriums continuing, right? And that's causing pressure to, homeowners, investors with rental property, and they don't have the income all of a sudden, and it's a little tight on them making their mortgage payments too. So what's the
True.
latest on that?
It's kind of I haven't really heard other than what I just recently shared. That hasn't really impacted the buyer standpoint. Again,
Right.
if worst case scenario, if this moratorium is given those particular owners of those properties and those landowners and landlords property, if they had to, I'm sure they may not want to, but if they had to, I think they could sell it,
Yeah, absolutely.
and they're
And I'm
not going
sure
to
they'll
be able to
make,
get what they asked for. So.
yeah, and I'm sure they'll make some adjustments to all that again too, hopefully. And yeah, right now it's a sell high, buy high market, and we're still seeing the new construction, which is always a barometer of what the market's doing. New construction's high. We're finally seeing a drop in supplies and
Correct.
construction, wood and all the other appliances are coming back down a little bit. So yeah, from what we've heard too, we'll end up at a normal market with no price drops, and the interest rates will stay low. And speaking about rates, what's the going rate today, Daniel?
Right now, it depends obviously on credit, but as of every rates change all the time. It all depends on the treasury, on those T notes. So I would say, depending on your score, in the low threes, twos are still definitely there. But if you're trying to get into the twos, if you're higher credit worthiness, twos are going to be a lot easier to come across. As far as low threes, if you're 700s or higher, you're easily getting in the low threes with no issue if you want a lender credit. But I'd say high twos, low threes.
Okay, good. Yeah, and Fairway Mortgage has a brand new product they're offering right now too. It's called Home 100. What can you tell us about that, Daniel?
Really excited about it. It's a great program. It's exclusive to Fairway. And what it is basically it's a down payment assistance program where we are offering our borrowers 5% towards their home. So what does that entail? 3.5%. It's an FHA product. So the program will pay 3.5% towards the down payment. The other 1.5% will go towards closing costs and prepaids. So it won't cover everything, but it's a great opportunity for those who have good credit and have limited resources financially. So it's a great kind of way to blend in the middle. And we can also accept gift monies with that program as well. So I'm excited about it. I've been able to help a lot of my clients who that were in other programs such as USDA for whatever reason, and had limited financial abilities or limited financial resources. I'm able to kind of come and meet them halfway with this program, and it's been exciting.
Nice. And again, for that program, what's the minimum credit score?
660 is the minimum score.
60.
Yep. And the cool thing about it is some down payment assistance programs, there are different requirements as regarding the down payment assistance. What happens at the end? Is it forgiven? And with this program, if you are not up to 90 days late one time in your first 5 years of doing the program, it's forgiven after that. So for 5 years, you do what you're supposed to do, pay your mortgage on time, not late. It'll be completely forgiven in 5 years. So on the 5th year in first month, congratulations.
Excellent, excellent. So we touched on the latest rates. It's still strong. Inventories getting slightly better, but it's still a big lack. We're still seeing huge, huge amounts of multiple offers in some area and some price points. Again, getting a little better, and the still a big spike in home equity in the last year. It's just been crazy. Prior to pandemic, I think we had about a 4% average in Atlanta. Some areas more, some less. And now we're seeing anywhere from 11 to 20% jump in the last year. It's just insane. And so, yeah, it's still a great time, everybody. And I'll leave Daniel's info after the end of the video, and all his links and stuff. And if you want to get in on this Home 100 program that Fairway Mortgage is offering and more information, his info will be there. And we sure appreciate having you today. And we'll catch up soon, Daniel. Thank you so much.
Thank you. I appreciate it. It's good seeing you again, Tom.
Thank you.